So welcome back to another Dividend Deep Dive. We do these on a weekly basis. It's either myself or Michelle that will actually do a dividend deep dive. So by the end of the year, you should actually have 52 of these videos. And these videos are primarily done for educational purposes, right? We get a lot of questions from friends and family and just people in general. It's like, oh, Ricardo, when do you know when to actually buy a stock in? Which dividend stock should I actually buy in? And how do you read the markets, right? And this is educational content to actually answer some of those questions. I know that it can be super difficult to actually digest a lot of the information that is out there. And people believe that, investing is difficult, and it's actually not. It's actually not. There is just so much noise around it. And we've put these videos together in order to distill the information and present it in a way that is actually understandable, right? We should all be investing in the stock market. It is the one vehicle that is a positive drift vehicle from a wealth generation perspective. And understanding how to utilize this vehicle is essential for growing your wealth over time. So let's jump in. And today we're going to be looking at UPS. There are two key pieces of information that you will find in all of these dividend deep dives. And that is one, the fundamental data, right, of the organization. And two, the technicals, basically how to actually read a stock chart and being able to see when to buy and maybe when to actually sell, right? So those are the things that we're actually going to be going over. So first, the fundamentals. Let's dive into that first and foremostly. Okay, so here we are in the Wealth Grid. The Wealth Grid is an application that we built to make this easier for us to digest the information, right? It's also an application that's available for everybody that is part of the Wealth Circle. It's a portfolio management tracker and tool. But right now we're actually looking at the stock analysis. You can actually do stock analysis on any ticker that you actually choose. Today we are basically looking at UPS. So when we're talking about fundamentals, we're talking about the fundamentals of the business, right? How strong is this business from a revenue generating perspective? And what's the underlying fundamentals actually tell us about the trajectory of that specific business? So let's first start with the price. UPS currently is priced at $104. They had earnings a day ago. And there's a good resistance point that I actually want to show you a little bit later in the video. The second piece that we actually want to look at is what's the annual dividends that they're actually paying per share, right? And the annual dividend is $6.56. That brings us to a dividend yield of 6.3%. Now I want you to baseline that yield against the APR that you actually might be getting on your savings account, right? I can tell you that your APR that you're getting on your savings account is roughly about 0.01%. It's nothing, right? Literally, if you had $10,000 in a savings account at that yield, you'd basically be making $1 for the year, right? So think about that in the context of UPS. UPS is a stock that's worth about $10,000, right? You're looking at $104 times 100 shares, which is going to give you that $10,000 number, right? And if you compare the yield to a savings account or even a high yielding savings account where you're going to get 3.4%-ish, right? You're actually going to make more money as an investor investing into UPS versus holding that $10,000 in a savings account or even actually having it in a high yield savings account, right? So that's kind of what I want to draw your attention to with regards to the current dividend yield, which is annually. Now, all dividend companies either pays you out on a monthly basis or on a quarterly basis. Now, there are a couple of other companies that we actually have in our portfolio that actually does pay you out on a monthly basis. I'm just going to mention some of the tickers here. O is one of them. It's a REIT. We also own quite a lot of QQQI and SPY-I. But let's jump back into UPS quickly. So what are the other key fundamentals that we're actually looking at here? First and foremostly, the system that we've actually built is also going to go out and actually take a look at the news sentiment around that specific ticker, right? Now, we are utilizing AI for this, and the reason for it is that there's so much noise in the market with regards to what's happening with different stock tickers that we've used AI to actually distill that into something that is meaningful for the retail investor. And this basically brings you back a positive or a negative sentiment, right, in a range. And right now the sentiment on UPS is negative. Why? Well, it's negative because it has been in a downtrend for a couple of months now, and I'll show you that when we actually jump into the actual technical analysis and actually look at the charts, right? But there are a couple of other driving factors behind this as well. One is the tariff debacle that's actually just happened. And there's also competition in the market, right? There's a lot of companies that's actually doing their own fulfillment, Amazon being one of them. If you've ever bought anything from Amazon, it's not being delivered through UPS anymore unless it's a remote location somewhere, like in Tahoe. But there's a reduced volume that's actually happening for all of these, old school delivery companies. Think United States Postal Office, right? Or DHL or FedEx is one of them as well. There's a lot of companies that's actually starting to do their own fulfillment systems now, and that's also, pushing downward pressure on the margins of the organization, right? Now, our AI news sentiment analysis is also going to show you some opportunities that this company has, to look forward to. And some of those opportunities specifically within the transportation vertical are things like utilizing AI to create efficiencies with regards to production, right? And expanding into different markets. Then we get to the real fundamentals of the organization, right? The financial metrics. And the fundamental metrics is really difficult to actually read within a brokerage platform, right? When you're seeing all these numbers, it's really hard to actually wrap your head around what does it actually mean. And our Wealth Grid platform has made this super simple. It basically gives you a little information icon to tell you exactly what each one of these metrics actually means. And without going through all of them, I just want to give you a quick snapshot on the things that I'm looking for when I'm deciding whether we should actually dollar cost average in on a specific stock ticker or whether it's time to sell that one, right? So first and foremostly is price per earnings, your PE ratio. You might have actually heard this before. And why does this actually matter? Well, it's calculated first and foremostly by dividing the share price by the earnings per share, right? And why it matters is because it shows how much investors pay per dollar of that specific earnings, right? A high PE ratio could mean, high growth expectations, and you normally find this with regards to the tech industry, right? And a very high PA might actually mean overvaluation of that specific stock. So bear in mind that a good PE ratio for many stocks is anything between the 20 and I'd say 30 range essentially. And that's kind of what I'm looking at. So PE ratio is one of them. That is a key metric. The second one is net profit margin. And in this case, UPS is still a very solvent company, right? And this matters because, again, the company is solvent. Now, there are a couple of other metrics here from a financial perspective, but those aren't the ones that I'm actually concentrating on when I'm looking to decide whether I'm going to be dollar cost averaging in on a specific ticker or not. Some of the key metrics that I look at is dividend safety metrics, right? And this is something that we've highlighted within our own platform, and you'll find this on every single analysis that you do for any stock ticker. And why is it so important? Because it gives you a real taste of, is the dividend sustainable by that company or is it not, right? And the first one is price to cash flow. It's cash that pays for dividends, not accounting profit, right? And it's super important that the business actually has free cash flow, right? And this number basically tells you, is there free cash flow within the organization, or are they utilizing debt to actually pay their dividend? And if that's the case, you never want to be in that situation, essentially. In UPS's case, they are still positive from a cash flow perspective. The next one is free cash flow. And this one is a good indication of, can there be risk with regards to the organization lowering their dividend payment because their free cash flow is not enough to actually pay for the dividend that is being offered by that specific company. And in the case of UPS, they are actually below dividend. And how do you see this? Well, take a look at this number, 6.39, right? This is below dividend. Where's the dividend amount? Right on top here. You'll see that their dividend is 6.56. So essentially they are paying out of pocket to actually cover the dividend for their shareholders, right? That's normally not a very good place to be, specifically if this is going to be the case quarter upon quarter upon quarter. The other key metric, and for me there's 5 metrics, right? It is price per earnings, net profit margin, cash flow, free cash flow, and the last one is going to be payout ratio. Now, again, this is also important because normally companies actually pays out their dividends from their free cash flow, right? And this is a ratio percentage. And you can see that at the moment, all of the free cash flow that UPS actually has is utilized to actually pay for its dividend. Again, that leads to risk if this is going to be the same scenario that's going to happen quarter over quarter over quarter. Their current payout ratio is 102%, which means that they don't have any additional capital to actually reinvest in things like AI to make their operational processes more efficient, right? That's kind of the story that this is actually telling me at the moment. Do I think that UPS is still a good company to actually have a dividend portfolio in? I do, and for a couple of different other reasons versus just looking at the fundamentals. And I'll show you some of that reasons on the actual stock charts when we do some of the technical analysis. Now, I also did want to give you some visibility as to what else you can actually find in the wealth grid. You will be able to find a chart over a different period for that specific ticker. What their dividend growth analysis has been over a couple of different years. And more importantly, have they actually paid out their dividends historically, right? And you can go through this chart and this data and actually see that they've actually been paying dividends on a quarterly basis for a very, very long time. So that makes me feel a little bit better with regards to, will UPS continue to pay their dividend or not? Okay, so now that we've covered the fundamentals, right, let's go through some of the technical analysis so we can see exactly where price is in relation to historical price and see where there are some support and resistance lines and what the technical analysis is actually telling us, right? So let's jump into our Thinkorswim trading platform and see exactly where things are with regards to the price movement regarding UPS. Okay, so here we are in a weekly chart of UPS, and you can see that it has had a high of $192, right? And the stock has been in this downward spiral for quite a while now. It's been moving in a downward trajectory for a while. However, it's actually broken this downward spiral. And this is one of the things that's actually making me want to dollar cost average in on UPS at the moment. We already own UPS, just as a disclaimer, and we've been dollar cost averaging on UPS for a while now. We've bought some of it down here at 185, I think. But this chart is basically saying to me that there's a couple of resistance points here that the stock is actually holding, right? And you can see that there's this gray line running all the way through in this point, right? It has stayed above your 90 range for quite a while now. And that seems to be a resistance line that's actually holding. And I want to show you exactly where this resistance lines actually come from. I'm going to have to zoom out for that. So bear with me. Okay, so now I've zoomed out on UPS over a 10-year period. And this should give you a better idea of exactly where that specific resistance lines are actually coming from. You can see that UPS made its lows right here. And this is quite a couple of years ago, right? This is, let me see exactly when this is. We're looking at March 2020 when it actually bottomed out here at the low of $82. And you can see that it's actually held that price point as a low going forward. And this is what gives me a little bit more confidence that UPS is actually coming out of the downward spiral that has actually been in over the past couple of years. So let me just pull this chart back up into something that is more relevant and more timely from a day perspective, right? So you're going to pull the chart up from a day perspective and just kind of look exactly where we are on a day-to-day basis, right? So UPS has currently had earnings. Its earnings was an earnings beat, and the expectation was $1.04, and the actuals came in at $1.07. So they've actually beat expectations on earnings. And you can see that the stock took quite a tumble, even though it had beat earnings. But from a technical analysis, I'm looking at what does it look like from a positional perspective, right? You can see that the stock came all the way down from $106 all the way down to $100. And that's that floor that investors are saying, hey, this is the lowest that this is going to go at this current time period. And this tells me that the stock retraced all the way to $100, but then basically pushed back up again, right? And is currently trading at about $104, which is a good thing. The other technical analysis that I want to point out for the stock is that it is actually holding the 200, which many stocks are not doing today, specifically in the downtrend that we've currently had. It is holding the 20, this is moving averages, as well as the 50 and 40 moving average, right? So you can see that it's kind of positioned right at this point where you might expect, candles to start forming that looks something like this, right? Might have a little bit of a pullback, but that's kind of the trajectory that I'm looking at for UPS at the moment. So from a technical perspective, I can see that there are definitely support and resistance that the UPS is actually bouncing off. The fundamentals aren't great, but it is improving. And the yield of 6.3% is one of the higher yielding stocks of dividend paying companies out there today. Yes, you can get yields that is slightly higher than that, but then you must also remember that it comes with a risk, right? UPS is a solid company. It's one that's not just suddenly going to disappear off the radar, right? They are building out their logistics in other countries. Their fundamentals are not that bad, even though when you look at it at a glance, it seems like a little bit iffy, right? But I think that's also because of investment within the organization. And for us, this seems to be a really good time for us to actually dollar cost average in on UPS. Given the fact that it has the yield that it has, given the fact that it has the market position that it actually has, given the fact that it has paid out dividends on a regular basis, I'm okay with dollar cost averaging in on this a little by little, so that we can actually reduce our cost base on UPS as a long-term hold for us moving into the future. So I'm hoping that this analysis has actually helped you just look at the fundamentals of an organization slightly differently. I hope that the technical analysis helps with looking at the analysis of an organization and its stock charts a little bit differently. There's so much more information that is readily available for you in our community called the Wealth Circle. You'll also get access to the Wealth Grid when you actually join this community. And the Wealth Grid will also help you look at stocks in a more pragmatic manner, right? Look at the fundamentals in a crisper, more understandable fashion. Instead of being shrouded in a bunch of data points that you actually don't understand. And also being able to actually look at stock charts and grids in a different capacity. What the windows are for you to consider investing, and when the windows are where you should consider actually selling a specific stock. And if this video is valuable for you, hit the thumbs up and share it with somebody that you think might actually benefit from watching analysis like this. Again, myself and Michelle does this analysis every week. So you'll have 52 different, dividend stocks to consider for your portfolio for the year, right? And we hope to see you within our Wealth Circle. So cheers for this week.